On today's Hot Sheet, I'm discussing Fannie Mae's latest housing outlook, new home sales, and October's hottest housing markets. Today is Tuesday, November 28th, 2023. I'm Byron Lazine, and the Hot Sheet starts now. Good morning. Welcome back to the Hot Sheet. Hope you are doing well. Hit the thumbs up here if you're joining me on the live stream, and certainly let me know which market you are tuning in live from today. If you haven't done so yet, Friday is the deadline. As of Friday, prices on BAMx are going to double. If you are looking to get more out of our content at BAM, you certainly should consider joining BAMx. And right now is the lowest price ever. We've been building content in BAMx since April, since the launch. There's thousands in BAMx who have joined because right now, today, it's literally coffee money. And you also get 20% off by using code Black Friday, which lasts until Thursday at midnight, when at that point, BAMx doubles and will go up continuously into the future as we continue to add the value to all of our courses, live streams, and also our community. You also get the daily downloads from this show each and every single day inside of BAMx. Everyone that gets in before December 1st, of course, will be grandfathered in at that rate for life, even when BAMx is just 10x the cost of it today. You'll be grandfathered in at this cost. So use code Black Friday to get into BAMx today. And now let's jump into Fannie Mae's housing predictions and their forecast, their outlook for 2024. This was just released, and the forecast predicts from Fannie Mae a mild recession in 2024. Obviously, we've been covering some saying no recession, and then others are in this camp, like Fannie Mae, of a mild recession. They have a decline of 0.4% in real GDP on a Q4 basis, which is crazy. Like Q3, remember how big the GDP was? It beat all expectations. So these forecasts, these outlooks can be wrong, but Fannie Mae is looking at a decline in GDP coming in the future. However, a brief recession is expected. The economy is forecasted to expand by 1.6% in 2025. So from quarter four here to quarter four next year, they've got a 0.4% decline in GDP, but they have an expansion of 1.6% in 2025. They do see home sales bottoming out in early 2024. So they're not calling the bottom now, but Fannie Mae is saying we're near bottom on home sales, on total transactions. Claudia, thank you for joining BAMx on Sunday. Great move, as prices will double on this Friday. So they're projecting home sales to bottom out in early 24, with sales expected to rebound modestly as mortgage rates decline. We've been seeing that decline in mortgage rates, not into a 6 handle, but into a low 7.25 handle. Not sure in your market what you're seeing for your consumers. Everybody's finances are different, but on Mortgage News Daily, we know that now for consecutive days, we've seen a 7.32 reading, which is very nice to see off of the 8+ handle we saw just 3 weeks ago. Total home sales are forecasted to be 4.8 million for this year, 2023. They've got us at 4.7 million in 2024 total transactions. That's what Fannie Mae is saying. So basically a flat year, 100K less than this year on transactions. So the transaction count, the low transaction count that we've become accustomed to here in 2023, expect more of that in 2024. Now, good news is I think there'll be less agents in 2024. There's just going to be the hungry, committed agents, the ones that want to get better each and every single day, that know that this is a profession, that professionals have high standards, and that they've got to commit to that to move forward in this industry. So I think there's going to be less competition because, hey, when going gets tough, the tough stick in, and those other ones typically will get out. So I think the opportunity on the same level of transactions for agents in 2024 is going to be actually greater than in 2023. 2023, we saw the remnants of the COVID agent, of the order taking agent. 5.3 million transactions in 2025 is the projection from Fannie Mae. So future is bright. Maybe that should be a tagline in your office, whether you have a physical office space or whatever you have. Maybe you should be thinking future is bright. Future is bright. If I put in the work now, a burst of transactions is coming in the future, because that's what we're seeing. We're at near bottom level of transactions. Seasonally adjusted right now, we're under the 4 million mark seasonally. The real estate market is cyclical. You see less in the winter. We know that according to NAR, we're cyclically at a seasonal adjusted rate of about 3.8 transactions, which is super low. We covered that last week. You can go back and give a re-listen to the hot sheet here on YouTube. Make sure you're subscribed, of course. Or you can also listen on Apple and on Spotify. We're looking for Apple reviews on Hot Sheet. So if you're a Hot Sheet fan and you use Apple Podcasts, love for you to drop a review there. Total mortgage originations are forecasted to grow from 1.5 trillion in 2023 to 1.8 trillion in 2024, then to 2.2 trillion in 2025. So what does that tell me? More people in 2024 are expected to use a mortgage than did in 2023. So relationships, conversations, communications with lenders continue to be ultra important going into 2024. Their business, their communication, their leads, their contacts are expected to grow in 2024. We mentioned yesterday on the hot sheet, for the last 3 weeks, we've seen mortgage applications increase. So that's a trend that seasonally we're gonna welcome that trend. As rates have come down, we're welcoming that trend, and that's a good thing for the future, obviously, as we look into where this market is heading. Okay. Payroll gains. There's a few ways, we talked about this yesterday, that we can see affordability come back into the market. It's payroll, it's people making more money, it's interest rates coming down like they have 3 quarters in the last 3 weeks, 3 quarters of a point in the last 3 weeks, or it's home prices coming down. Home prices have been very sticky. We have seen rates move off of the 8, which has helped. And are people going to be making more money? Well, Fannie Mae doesn't believe that to be the case. Payroll gains show gradual softening compared to earlier in the cycle. So there's a 3-month moving average. You're seeing a decline on payroll gains. So I don't expect affordability in 2024, especially if we go into mild recession, as Fannie Mae is projecting. I don't expect the affordability to come through an increase in income. We'll be looking for that on home values and or mortgage rates. Mortgage rates can have the quickest impact on home affordability. If we get a sharp decline, similar to how we had a sharp increase, we'd have to get the Fed, the FOMC, to start decreasing that federal interest rate, to start doing a Fed rate cut. They have no indications. They've shown no indications of doing that on the December meeting, which will happen on the 14th and the 15th. There is projections that they could start as early as May. So we could start to see that for second half of 2024. That, just like this Fannie Mae report, is just a projection out. Inflation and labor market cooling. More on this from Fannie Mae. Labor market added 150,000 jobs in October, as we covered here on the hot sheet. And average hourly earnings rose just 0.2% over the month, indicating healthy but not an overheating condition. The Fed likes this. They don't want conditions to overheat when it comes to the job market. However, the unemployment rate ticked up to 3.9%. That's also another feather in the Fed's cap. It's making it easier for them to fight this inflation giant that we're up against. 0.5 percentage point above its recent low in April. Both initial and continuing unemployment claims have trended upward, while recent data has been affected by the auto worker strike, which should reverse in the next data print. We think the labor market is now clearly showing a softening trend. What are you seeing in your market? There are probably markets I'm not super familiar, but just what I'm seeing and reading based from the outside, like a Raleigh, North Carolina, probably adding jobs, probably competitive. You know, some of those areas, Raleigh and Charlotte, have a 10, 15, 20-year growth expansion run in front of them. If you're an agent or an advisor in that area, let me know in the comments. But you could have an area that is contracting and you're probably not seeing wage growth in those areas. So that'll all depend on where you are locally and what you're experiencing in your local market. More from Fannie Mae on the housing market. A challenge from Fannie Mae would be that mortgage rates approaching 8% led to a decline in application activity, which was the lowest level since 1995. So anytime we get back to 8 or cross the 8 mark like we did, you would expect to see a pullback in demand. There's no saying that we're not going to do that at some point in early 2024. We're rooting against it, of course. Existing home sales are expected to slip further in this quarter four. We're already down to 3.8 seasonally adjusted. They've got us at 4.8 on the year, 4.7 projection for next year, but we're at a low level. I'm calling this the bottom, hopefully, for transactions here at a 3.8 mark. We haven't seen anything like this since just after the great financial crisis. Existing home sales expected to slip further, but a rebound anticipated as we look all the way to quarter four 2024, as these rates start to pull back, as the Fed starts to decrease the federal rate going into the end of next year. The winter of next year will not be as hard, as cold as the winter of this year. I don't know about the temperature outside, but in terms of the market, the frost on the market, we're like in I've said it for a while, Cold War scenario. The Cold War is going to start to loosen up when we're in next winter, 2024. The professionals know, hey, putting in that work now is going to mean like your business for quarter one of 2024 is probably already set based off the actions you did the last 3 months. And so what we're doing now is starting to build out that end of the year in 2024 and take advantage of an expansion in transactions. But the foundation starts now for real estate agents. Single family housing and prices are expected to soften, but the lack of existing homes available will continue to boost new home construction in the medium term. So Fannie Mae, just like others, saying, hey, new construction is going to be a major player for housing supply in 2024. Builders are going to have a significant control of the market as we look forward into 2024. And here's the table, which we'll have available for quick download for all BAMx members from Fannie Mae. As you look at housing starts here, new construction, they've got it going down in 2024 before going back up by the end of 2025. That has more to do with the financial constraints of the economy going down in 24 from where we were at in 2023, but still at a level much greater than what we've seen, the 10 years leading up to this crisis in home inventory. Okay. New home total home sales again. They've got us here at this 4.6 million level quarter three. This is total home sales, so that includes the new. When I say that 3.8 million from NAR, that's existing. Total home sales here at the 4.6 million seasonally adjusted in quarter four, to go up in quarter one to 4.5, 4.5 in quarter two, 4.753 in quarter three, and then we get to the 4.8 million that we talked about the end of quarter four. Everything in 2025, every quarter we're up above the 5 million mark on total home sales according to Fannie Mae and the projections. The future is bright. New single family home, you see here the projections in the 600,000s throughout 2024, really pretty much flat between that 625 to 675K level each quarter on new single family homes. There, the 30-year fixed mortgage rate per Fannie Mae, 7.6 in quarter one of next year, 7.4 average in quarter two, 7.2 in quarter three, 7.1 in quarter four. So Fannie Mae says get used to the 7 handle on the 30-year fixed. It's not going to be until 2025 quarter two until you see a 6 handle, according to Fannie Mae. They've got the 2024 out of 23, 24, and 25. at the highest average throughout the year on the 30-year fix. Remember the beginning of this year, we had days where we hit 5.99. They don't see that in our future, not only in 24, according to Fannie Mae, but in 25 as well. So they have a 6.9 average on the 30-year fixed rate for all of 2025, 7.3 for next year in 2024, and a 6.9 in 2023. I'm in the camp of 2025 being lower than 6.9. We have a lot of projections that support that, as the Fed will undoubtedly start to cut this rate at some point. They always do. History tells us that they always do. And without some unforeseen catastrophe, they likely will start cutting that rate as early as May of next year. Monthly new residential sales for October 2023 are out, according to U.S. Census Bureau. Okay, monthly new residential sales for October 2023 are out, and I will share that with you now. This will be available for BAMx daily downloads. New houses sold for October 2023, 679,000. New houses for sale, 439,000. The median sale price for new sales was 409,300, well off of the 450 that they were previously trading at. Next release would be December 22nd. You can see this new residential sales chart, which will be available in BAMx for you on a seasonally adjusted rate, well off of the end of 19, 2020 level, but holding pretty firm there above the 600,000 in terms of units. This is all seasonally adjusted numbers there on the new home sales. This is 12.3% below the revised rate in September of 719,000, but it's 17.7% above October's 2022 estimate of 577,000. The average sale price was 487. That's also well off of the peak that we saw for new home sales, averaging at 550,000 just earlier in the year. For sale inventory and months of supply for new home sales was 7.8 months. 7.8 months for new homes, new construction is a buyer's market. Anything over 6 months is a buyer's market. 6 months is a neutral market. Under 6 months is a seller's market. We still see a seller's market in existing home sales. We're under 4 months of supply across the country there. But for builders, we're up at 7.8. And that's why Fannie Mae is projecting, and going back to last segment, Fannie Mae's outlook, that's why they're projecting a slowdown, not only the cost to construct, but also the supply that is now being built up, the constraints on the buyer, the affordability, being able to afford a new product at a 487,000 average sale price. Not every home buyer in America can afford that. You're going to see less building because of that supply as well at 7.8 months. Where are some of the hottest housing markets that maybe builders and investors should be paying attention to? Realtor.com just released a report on this for October. The Manchester Nassau Metro was ranked as the country's hottest housing market in October. It's the fourth time in 2023 that Manchester has held the top spot, ranking first a total of 21 times and consistently in the top 3 since February 2021. How does Realtor.com come up with these metrics? They consider market demand measured by unique views per property. So their data, which is substantially less than the likes of a Zillow, even now being passed by Homes.com, but still a significant portion of the pie. So measured by unique views per property, and the pace of the market measured by the number of days a listing remains active. That data is going to be pretty consistent across all portals. The Northeast and the Midwest dominated the list with 12 and 8 markets respectively in the top 20. So Northeast, Midwest, that's where the hottest markets are living today. Let's take a look at what we have on the list here. And you see there, Manchester, New Hampshire, which has a median listing price of $524,000, is number 1 on this hotness rank. Rochester, New York, Springfield, Mass, Rockford, Illinois, Concord, New Hampshire make up the top 5. The Worcester, Mass, Connecticut region, which is weird little location crossing state lines there, would be 6. Oshkosh, Columbus, Ohio, Lancaster, PA, and Providence, Rhode Island make up the top 10. Then you have Hartford. So this is all Northeast Midwest. And these are all smaller. These are not major cities besides Boston being on the list at 17. These are smaller cities, smaller metros: Hartford, Portland, Dayton, Ohio, Akron, Ohio, Topeka, Kansas, Burlington. Then you have Boston, the only major city on the list: Monroe, Michigan, Racine, Wisconsin, and then the Norwich, New London area of Connecticut. There's your top 20 for hottest housing markets. If you're working one of those markets from, listing agent perspective, might be time to educate those sellers on the fence that they should be taking advantage of the hotness as suggested by Realtor.com of their market. Markets seeing the largest jump in rankings in October of 2023 would be Phoenix, Las Vegas, Chicago, Kansas City, and San Diego. So these 5 markets making a significant improvement upwards. So viewers per property are going up on Realtor.com. Hey, is there demand in the future in my market? Well, in Phoenix and Vegas, Chicago, Kansas City, and San Diego, you could point to this study and say, yeah, views on Realtor.com are trending up, which means getting on the market now and taking advantage of these buyers who are starting their search now. We're seeing more buyers come into our market now. Going ahead and taking advantage of those would be smart. I'd love to take advantage of not only a full day today, but a full week, a full month, a full ongoing future of a 10-year yield that lives under 4.4. We know that when we're under 4.4, we're at a pretty stable point, less volatility as it relates to the 30-year fix. It's where we sit right now on the 10-year Treasury yield as of this live recording here at 9:52, this live stream. And we're at 4.386 on the 10-year. That stability in the 10-year has meant stability on the 30-year fixed. You can see here that yesterday we came in at 7.32, the same number, the same reading on the 30-year fixed that we closed out the week last week. This is, if you talk to a mortgage lender that's been in this for a long time, this is how it used to be. Readings wouldn't change really much at all. And that's what we want in the market: stability, so buyers can predict and not feel like there is some type of fire under them on their search. We had 7.33 the day of November 21st. So we're seeing stability here in the last couple of weeks on the 30-year fixed, 7.29 on the Freddie Mac 30-year fixed weekly survey, that would be. So good news there. We'll continue to hope for good news. Continue to look for you in the BAMx community. You get the lowest price ever by using code Black Friday. Get 20% off. Prices go up. That code goes away on Friday, December the 1st. We're extending it here throughout the week. That code goes away Thursday night. December 1st, prices double. If you're in before December 1st on BAMx, then you get grandfathered at that right for lifetime subscription to BAMx. When you go look at the price, I'm saying 20% off. You're going to look at it. The annual subscription, 25% off, comes in under $100 for the entire year. We have multiple live streams, a huge community, a ton of course content, the daily downloads every single day on here. You're going to be like, this is coffee money. I know you keep saying that, but this is an absolute ridiculous value. Love for you to check it out. And I'm looking forward to being back here with you guys all tomorrow on the hot sheet. Make sure you subscribe to the channel and hit the bell so you don't miss one of our live streams. I'll be back here tomorrow, and I'll have a Real Word podcast, a new Real Word podcast updating all things in the real estate industry as it relates to NAR and the ongoing lawsuit. That'll be up on the channel here today at 2. So do make sure you are subscribed, and have a great day. I'll see you guys soon. Toodaloo.